Hello everybody, today is Sunday, December the 1st, 2013. My name is Michael Wright, and this is the Weekend Elliottwave video. Just before going forward, please do pause over the recording and read over the risk disclaimer. Alright, let's jump right into the markets. As of late, there are no open trades. However, performance-wise, small little bounce back in November, ending of profitable, but looking for December for some moves in favor of the US dollar, and most of the video will be outlining that side, specifically that of the dollar Swiss and the euro dollar. Taking a look at the dollar Swiss, the outlook still remains for a downside bias. I still like longs against 90.10. That's about 50 pips lower. In terms of those who are looking to get short around these levels, it's a bit interesting because we kind of already broken out to the top side. So unless this is a false breakout, then don't rule out a possible or even a move. Actually, this is very preferred, seeing a move topside into 91.30 before a thrust lower to end this downside movement. There is no divergence just yet, so we do want to see some bullish momentum divergence before looking for a reversal. So again, 91.30, and then look for shorts again to complete that measured move of the A equals C. You ideally see the same thing with the euro dollar, and so you should in the case that the euro is the inverse of dollar Swiss. Now, similar action with the euro dollar compared to the dollar Swiss is that we have already broken some key levels here. On the euro dollar, we already broke support, so now we're looking for shorts against 136.30. There is a trend line topside not too far away, so I wouldn't rule out seeing a back test to 136.30. And actually, just before we go forward, let's actually see what the market is doing during pre-market. The video will be out probably around the open, but right now the euro is trading at 135.85, so about 4 pips lower. Gap not too serious, but again, I wouldn't rule out seeing another move here, but ideally support still comes in a tad bit lower. This area again, looking at for the euro 134.80, 134.90, that's almost 100 pips. And then dollar Swiss, that area it'll be 100 pips higher, 91.40, so a little bit different, giving way to the euro Swiss. Then I'm not going to touch euro Swiss. It's a bit choppy, not even a bit, it's a lot choppy, but you still have that support area for euro Swiss that comes in just around 122.80. So for those who are looking for that range trade there, that bodes well. But then coming back to the euro dollar, buy lower, about 100 pips lower, sell higher for dollar Swiss, 100 pips higher, and then look for those measured moves. That's the ideal play. And here for the euro, that measured move of A equals C, 136.80 about. Alright, so that makes sense there. That's the ideal plays as we kick off the start of December. And then also now, if you look at the Aussie dollar though, Aussie, probably going to stay away from just for the meantime. There is some trendline support that does bode well. Euro Aussie may be a better play than to play the Aussie dollar specifically, and that's majorly because the euro dollar seems to be in a clear type of wave. Okay, now looking at the euro Aussie, that cross, we did already have a double top. You see some bearish divergence, but again, because of that large upside thrust, we'll need to see basically price action consolidate a bit more and really show some technical developments before getting on board in terms of a clear direction. You could call this a small triangle or a small congestion zone. That top side of 161 fib also meeting that double top. at 150.40. I wouldn't take this trade now just because my stops will have to be too wide. You're talking about stops over 100 pips. But here you're looking for a clear reversal. All right. Um, be careful in terms of end of the month, holiday season kicking around, so liquidity likely to dry up. But Euro Aussie, I do like downside. We can even wait for this range here to break down. Let's look at the pound dollar from the pound side. I don't like it, to be honest. Have to open up the time frame and really look at it from a larger perspective, looking at the weekly developments, and then even there, this proposed triangle was met back here, and we're kind of around resistance. Okay, so we need to basically sit here by the week's end and then look for, again, some downside bias here. We already had this triangle break. Obviously this proved to be a false breakout since we re-entered back into those critical zones, but with that top side ceiling holding, I still like larger moves for about 130. Something else that's interesting is looking at the S&P 500. All right, all we had was run-ups, but that divergence is still here. I'll be wary if you are long the S&P, just because the air is getting pretty thin, and once fear starts initiating, and this is what happened with anything with risk. Once fear starts to kick in, that downside becomes a lot more quick, right? Money starts to dry up, and capital starts to, in terms of the S&P, starts to exit, and then what you see is downside spirals. So be careful if you are long. An idea would be to start scaling out of that position, and again, that's just because looking at the 4-hour, daily, and weekly, they're all pointing to a large reversal. Has been the case for a little while, but again, with every rip higher, there's no terms of moves behind it in terms of confidence. Meanwhile, let's look at the dollar CAD. That's also an interesting pair to say the least, with top side already being broken. I didn't take any longs on this pair, but that would have proved to be well. You're looking at about 106.70 for the next top side for longs. I'm just gonna stay pat on this pair for now. I want to see price action develop here as well. So similar to the other commodity currencies in terms of the Aussie dollar, indeed bias still lies for downside or moves on the dollar, but just need for prices to retrace a little bit to re-enter those positions. So on the daily time frame, you're looking at about 104.70. Alright guys, so again, I'm going to focus on, for the first half of the week, the dollar Swiss and the euro, and then from there, look to pay out both sides. Look again, dollar Swiss, I'll look for longs near the open, target that 91.40 about, then look to get short again, target a 90, and then flip again once more. In my opinion, dollar Swiss is probably the clearest of all, even in terms of the daily setups. So I'll look to play those ranges and see how things come to life. Even so, if you look at the dollar Swiss on the daily, is also very appealing, because obviously we already broke out, is holding these key levels, and then that next downside, if all plans out to be true, you're looking at a 61.8 fib and 100% not too far away from it. Alright guys, thanks for watching the weekend video. Liam will be holding the weekend webinar shortly, about 4 o'clock Eastern. Chris will be holding the midweek webinar on Wednesday, 1600 Eastern, 20 GMT. And from there, we'll look forward to talking to you all in the chat room. Also, feel free to Skype me at wtcg.mike if you have any questions. Cheers and good luck trading.